Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Thursday, the 30th of November, last day of the month, Thursday, the 30th of November, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. Welcome. Going to go for our usual regular run through in here today. We're going to take a look at what are the macroeconomic, fundamental, geopolitical events that are shaping in financial markets right here, right now. We'll take a look at how those events are then shaping the charts. What are the different financial market asset classes doing, with particular focus on the equity indices, because that's what you guys are trading, plus focus on the bond markets, because the bond market's still very much important in here, very much the drivers of other financial markets in here as we go to this potential Fed pivot, pivoting from their hiking stance to potentially a rate cutting stance. And then we will also take a look at oil, because it's OPEC Plus today. Their delayed meeting from last weekend, a video conference meeting in here coming through later today is the anticipation. So we're going to go for all those things in here today. I want to start off in here with my market chartist technical analysis reports that you can get if you're watching this on the live stream, which I'm guessing a lot of you are. If you're in the members area, if you're watching this on YouTube, or if you're watching it on the recording, or in the YouTube, you won't be able to go and look at the members area. Just below where you're watching this, though, either on the recording or on the live, you'll be able to download the technical analysis reports, also the fundamental reports in there, also the news, the Live Squawk news service as well. So take a look in there. But in here, the technical analysis reports, and what I want to focus on here, this is the 2-year note, and we've been speaking about this. 2 days ago, we broke above these peaks in here, and we accelerated higher, and then accelerated even higher today. Yes, we did dip back lower yesterday after reaching a high in here. We just backed off from this resistance level over here, actually, just pipping up to this important area up here, 101.29 kind of area, and backed off again, but still looking very strong, and upside risk in here to go even higher. So real threats in here from my perspective for an even more significant push to the top side. That spike high up there at 102.03 is a really important level as well. So we'll be monitoring that as we go forward. But we've surged through these levels in here, and this higher price, lower yield move at the US short end is being driven by an anticipation of the Fed pivoting from the hawkish stance to a more dovish stance. The rate hikes are not only over, but we're going to get cuts maybe sooner. And I've been going on about this for ages. You guys Stefano, you've been coming on a lot in here. Good morning, Stefano. And you other guys who've been coming on over the last few weeks, we've been talking about this a lot, right? And I think it's super important, okay? And equity markets are not really moving, but I think they're about to play catch up. I think we are going to get a move to the upside. The reason equity markets are not following the bonds higher is there's fear that the reason bonds are going higher, the reason that the Fed are going to pivot, the reason that we've got lower yields, the reason that we're expecting potential earlier than previously anticipated rate cuts from the Fed is because there are fears that we're going to go into a more, maybe a deeper slowdown and even a recession in the US. That is the concern. And obviously that's negative for stocks. So I think that's why stocks are not breaking out to the upside. Previously, they've been following this bond market rally. Stocks have been rallying, bonds have been rallying, and they've been leading stocks higher. We've seen stocks go sideways in here pretty much since before the Thanksgiving holiday. Over a week of sideways price action, slightly nudging higher, but sideways. But every time we have a dip, the market rebounds. And I still think there's risk that we go higher from here. So I think this is important, this breakout. And if we go to the current market, you'll see, even though yesterday we kind of blew up and then we came back, look, we're tracking back higher again in here overnight, okay, on the US 2-year note. That 102.03 spike high is really important. Excuse me, just above 102.00 as well, we've got this retracement level. So 102.00 and a half, 102 and 102.03 are important levels on the 2-year note, and you can monitor that in here, right? Actually, this is on the March contract. We've got the analysis actually here is on the DEC contract, as you can see in here. Sorry, someone calling me up that I don't want to speak to. So these are important upside levels to monitor. This is on the analysis here of the duck contract. We're going to roll to the March contract shortly. But if you go and look on the March contract here, it's the same kind of price action. We haven't got the back data in here to look at, though, on the March contract. But look, still looking bullish in here on the March contract. So whether you're looking at the DEC or the March contract in here, still looking very bullish, and still, for me, pointing to the upside. So still keep an eye on these levels in here on the 2-year. And it's not just a 2-year, though. excuse me, marking levels. Obviously, the 30-year and the 10-year are not pushing as aggressively higher. Why are they not pushing as aggressively higher? We are not pushing aggressively higher in here this morning because we are seeing on the longer end of the market, because the longer end is more prone to what the economy is doing. And obviously the economy, there are concerns about maybe a slowdown in the economy. So the long end is not going up as aggressively as the short end. Okay, we're seeing the short end led rallying here at the moment. But nevertheless, watching out for these resistance points. You can see we're flirting with these resistance on the 30-year note, checking out my resistance levels in the table in here. Okay, we've got the table in here at the end. Okay, so checking out the resistance points, you can just have this one page up, right, and just watching the resistance points on the 30-year, on the 10-year, on the 5-year as well. Okay, so checking out those. And then on the indexes, as I say, it's been very much sideways sitting, flag formations, having had this very impulsive move up from late October. We had that surge higher through the middle of November, and since then it's been kind of grinding up and sideways since Thanksgiving, but still underlying bullishness in here for both the S&P and the Nasdaq in here. You know, we spiked up yesterday to another new high in the Nasdaq and then set back, but still an underlying bullishness. And again, if we go and take a look at the charts in here, for me, these still stay very, very bullish in here. You can see the market choppy and sideways. We did make new highs yesterday. We just went up to this peak in here on the S&P, this peak from back here in, where are we on here? Back in here from September. Okay, we went up to that and then fouled back from that peak, just pipped up to that peak there. I think we hit it pretty much bang on, right? The high 97.5 yesterday was 97, so we were just short by 0.5. Okay, but then and backed off from there. But look, bouncing again already in here this morning, still pointing to the upside, and it's the same thing in here on the Nasdaq in here. It's staying underlying bullishness on the Nasdaq. Yes, it's been kind of sideways in here, but go and switch to the daily chart here on the Nasdaq in here, and you see there's still that underlying bullishness. Yes, we made a new highs. We got very close to the high over here again in here, this high from the summer, from July, very close to the high for the year, just backed off from below there, but again nudging back higher in here today. Now we do have some important data in here coming through today in here, actually just while we're here. 10-year yields, okay, making new low yields in here. We've already spoken about it on the price, backing off a little bit today, but nevertheless the threat's still lower. Looking into today, as Stefano says there, the main focus for me early on is just under 1 hour's time. We have the PCE data, okay, year on year and month on month. We had the quarter on quarter data. That's not as important. The year on year, month on month data is far more important. Why is this data important? The Fed tell us this is their preferred measure of inflation. Yes, the US CPI tends to move markets more, but this is what the Fed tells us that they watch. So we're certainly watching that at the moment, particularly as the Fed, as we know, are potentially going to start pivoting towards an earlier cut than we previously thought. So that data comes out in 51 minutes now. We're certainly keeping an eye on that data. Also, we have the OPEC Plus. We don't know when that's going to come through. Okay, when we get but we get OPEC Plus meeting today. Yes, that's going to be important for the potential impact on oil. And if oil goes back up in price, that may put some inflationary pressures back into the system. So we're going to be watching that OPEC Plus. Higher oil is going to be negative for stocks potentially, and lower oil is going to be positive for stocks. So we'll see how that affects the oil price when we get the OPEC Plus. The other thing to note in here this morning, it's not just the US world, right? There's a big world out there. If we look in here, CPI data from Europe in here, it's a red for negative, but not negative. It's negative for the currency, for the euro. It's not negative for the economy. It was less than expected. Okay, so expected at 3.9 year on year, came in at 3.6. Okay, better than expected. The data in here. For November, the preliminary data in here. So that's certainly a positive in here, okay? The core CPI and the headline CPI in here. Both of them beating expectations in here. That's a positive. It shows that it's not just in the US we're seeing slowdown. We've seen it in the UK data more recently. It's now being seen in the European data. Inflationary pressures continue to come down. And I've got an article on that. We'll talk about that. So watching out today, in 50 minutes now, the PCE data, very important, could really impact markets. We do have Lagarde speaking also in 50 minutes. Could be interesting. Will Lagarde mention the CPI data in here? And as I've been talking about We'll come to the 5 things to start your day shortly, which is talking about Mester speaking yesterday. Mester, remember, a hawk, shifting slightly more dovish, just as we saw Waller do a couple of days ago. We'll talk about that in a minute. But we've got further Fed speakers. Remember, the Fed goes into their blackout period on Saturday. We only have the rest of this week, today and tomorrow, for Fed speakers. The next Fed meeting is on the 12th to 13th. 1.5 weeks before that is the blackout period. It always is the Saturday, 1.5 weeks before the meeting. So this Saturday is the blackout period starts. So tomorrow is the last day for Fed speakers. We get Powell tomorrow. That's going to be super important. We're going to be watching out for Powell. But going back to today, we get Williams speaking later today. So we're certainly going to be keeping an eye on what Williams has to say. Let me go to and there's the Eurozone CPI data. Talking about that I've just mentioned there. Tumbles, pits the ECB against the markets. Remember, the ECB is at the moment staying very, very dovish. The market is trying to price in potential rate cuts coming from the ECB as well. Markets pressurizing, looking for rate cuts. The central bank holding off. But remember that the ECB is traditionally very, very dovish, although very conservative as well. Quickly going through 5 things to start your day, because I've covered nearly all of this anyway. But look in here, Mester in here, among the more hawkish voters. Where do we know that from? Remember, I shared with you yesterday the hawk dove sheet in here from Trade Day. I'm going to put it back into the chat once more in here. Hawk dove sheet. We heard from Waller earlier in the week, right? Here's Waller down at the bottom in here, a voter and down at the hawkish end. Here's Mester, also down at the not a voter at the moment, but also down at the hawkish end. And Mester yesterday was certainly far more. Where are we? I've got some stuff from Mester in here. Is it in there? Oh, no. Where is it from Mester? So yeah, the market's still pricing in May. Okay, so maybe there isn't an article on this. I thought I popped out an article on this. No, I don't see it at the moment. Okay. All right. Yeah. So anyway, so Mester in here certainly more dovish than expected. Bond markets continue to rally. We've been looking at that all morning. I've been talking about this for weeks and weeks and weeks. The strongest month of bond markets since the 1980s. The strongest month of bond markets, the biggest rally in bond markets since the 1980s in here. Higher prices, lower yields. Okay, as the threat of rate hikes goes away, inflation is slowing in here. And then we've now done with hiking rates, and rate cuts are on their way. Okay, so all of that. Stocks gloom. There's some negative outlook. So JP Morgan is standing apart from the most gloomy forecast. So look, the Wall Street strategists most think that the rally is likely to continue. Okay, though JP Morgan is standing apart from the most gloomy forecast, sees the S&P 500 declining 8% from its current levels by the end of next year. So JP Morgan more on the negative side. OPEC Plus, we've spoken about a lot about that. We're looking for that today. And then we've already spoken about what we've got coming up in here today. So November bids adieu. So goodbye to November with inflation data. We've got that coming up. And OPEC, we know that. I've already discussed that. Wall Street futures rising overnight in here on hopes of the easing inflation data. And because of these, the more dovish tone that we've seen coming through in here. Biggest blowout in bonds since the 1980s sparked everything rallying. So bonds up in price, yields lower. Stocks have been rallying as well, as we know in here. And overnight stocks gain before the US inflation data. Euro's down. Why is the euro down? Because that CPI data, better CPI data, more likely to see a more dovish ECB. Euro has gone lower, dollar up against the euro. Oil inches up, all eyes on OPEC plus. Let me see if we've got timings on this. I don't think we have. Virtual meetings on Thursday. Doesn't say. Additional production cuts between 1 and 2 million barrels per day. So that's what we're working out for early 2004. Let me see. Originally scheduled for last week. Usually it just comes very randomly. Let me see if we've got that in here. Does it actually give any kind of timing? They kind of agreed 1 million barrels a day, say sources. Does it got a timing? Sometimes it's just very random. It's usually the US morning, European afternoon. So in the next 2 to 3 hours, we'll probably expect that to come through. Talking about 1 million barrel cut. Saudi Arabia looking for more cuts as the price has gone lower. Let me see if I can actually find a timing on this. It's not normally a set time. It's just whenever they finish talking. No, there's no set time in there. Yeah, and if we look at the CME tool, this is the March one. Remember I said weeks ago, I'm expecting this to edge up towards 50%. We're looking at it now, 42.7. You add this on as well. We've now got like a 43, what's that, 43.7, 44.5, nearly 45% chance now of rates being lower by March now. Okay, so this is continuing to track higher, and by May we're definitely looking for a rate cut now. Only now a 23% chance in here of rates being where they are in May, looking for lower rates by May, but now growing risk. And if this continues to rise in here, I've been talking about this for a long time in here, then you should eventually see equities rally. Obviously, the problem is equities don't want to rally because they're worried that this is going up. Rates are they're going to cut rates earlier because of fears about the economy. A quick nod to the overnights in here. So you can tell I'm still bullish across the board. I'm not going to go through all the charts again. You've got the chart reports. Looking for that breakout on equities to come through. Still not really having, kind of failed a little bit yesterday. But Asian stocks are up overnight in here. Nikkei, Hang Seng up overnight. European stocks are up overnight between 0.4 and 0.5 in here overnight. And the US stock indices, futures in here that you guys are all looking at, up about 0.25% on the NASDAQ and the S&P overnight as well. So looking for those to push back higher is my view today. Watching those bond markets as well. Are there any questions, guys? So helmets and goggles on. You've got now about 43 minutes until the PCE data. Watching for that PCE data. It is important keeping an eye on that. Keeping an eye on randomly. We don't know when the OPEC Plus meeting decision is going to be, but it's kind of been leaked $1 to $2 million. 1 to 2 million barrels of cuts anticipated going into 2024. So if that comes out in that kind of region, if it's the upper end of that region, it's going to be probably see the oil price go up, but it's already kind of priced in at $1 million. If they don't deliver $1 million a barrel cuts, then we'll probably see the oil price go back down again. Remember, lower oil price positive for stocks, higher oil price negative for stocks. So watching out for those two things going into today. And then also we have Williams, the Fed speaker in here now. If we go and take a look at Williams in here, so where are we on the Hawk Dove sheet? So Williams certainly more in the center towards the middle. So if we see it, we should probably expecting a relatively dovish comments from Williams later today. Williams coming up at 09:05 Eastern time today. Guys, I'm going to wrap it up there. Any questions? Nothing coming through. Thank you, Jim, for saying thank you. Thank you for all you guys that come on regularly. I'm going to wish you all a great trading day. Take care. Stay safe. Be ready for that PCE. Be ready for OPEC. Be ready for Williams. I'll be back with you with another Bull versus Bear webinar to round off the week as we go into December tomorrow. Bye.